Hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker, and these are the Central Florida numbers through the end of February. It comes out in March, covers the end of February, and I've been really curious to see, now we're getting past January and February into the spring months where things typically pick up. Is median price going up or down? Are we getting some inventory? What's going on in sales? And I'm going to give you my opinion for what it's worth, what's likely to happen as we go throughout this year. So when you look here, right now, currently we sit with 5,555 homes. That's a pretty spectacular number, 5555. That is up 140% from February of last year, but it's still super low. We're going to look at months of inventory here in a second. We're inventory 6,115 in January is down 9.2%, which is important to notice because there's been a lot made, understandably so, with higher rates and what the Fed's done. That where are we going to get this big market, depreciation or big price decline? I've held, for the last year and a half that the market was going to flatten out, and then there's nowhere for that inventory to come from, with sellers sitting on record amounts of equity, should I say, and at the same time, extremely low rates and not a big incentive to trade that equity in when the discrepancy in rates is so big. And that's what you're seeing. Usually this is when you start to see more inventory coming into the market, and I'm really going to be interested to see March and April. But for right now, we actually have a 9.2% decline from January to February. I took the median price here. It went from 345 to 358 year over year, month over month. We're up 2.3. So year over year, we're up 3.8%. Month over month, we're up 2.3%. So pretty flat market. Months of supply. We went from less than a month of supply, meaning that you could sell the whole supply in 0.72 months based on the transactions for that month, to having 2.48 months of supply. And if you look from month over month, we went down from 3.65. Inventories dropped another 32.1%. Some of these other numbers that I think are interesting. I seen a headline that says there was an increase in distressed sales of 57.1%, which is true. But we went from 14 distressed homes to 22 distressed homes, which is basically nothing. It accounted for 1% or less of all homes in the market. And then just this little comparison here that we can kind of look at the numbers here. So if you see here, February, so we're going to come back to this rate in a second. So single family homes is 4,152. So that makes up the 5,555 is 879 condos and 524 townhomes. New listings, 2,820. That's down from last month. New contracts are up just a little bit. Total pendings up a little bit. Average days on the market went from 57 to 62, so still about 2 months on the market on average. And if you see right here, this was a really low number printed for January sales, but we are up to 2,240. And of course, as the year goes on, January and February typically are the slowest months. And the biggest thing that's making a difference is, look, we went from February 2022 having rates of 3.87, capped out at almost 7%. And then you see now we went all the way almost to 6, and now we've been bouncing around in this mid 6% range. That's what's really driving the market, are rates, because obviously that's what the Fed used to slow the market down. That's why you've had so few transactions compared to last year, because the Fed made money more expensive, which obviously makes people less likely to buy a home when the payment's much higher. Now the Fed is on the other side of that coin, where they are starting, CPI and these things are starting to show lower inflation. Rates have started to fall. And I think that trend is going to continue. So the $1 million question is, as rates fall, which they have been, will we get any more inventory? And what's likely to happen with prices here in Central Florida? The answer is surprisingly simple. If rates fall, that's going to push more people back into the market. We're already seeing that with the amount of pre-approvals. And if you look at the mortgage applications, week after week, they're starting to increase as rates fall. It just makes sense as payments get less expensive and it's easier to qualify as far as payment goes. More people jump back in the market. And if there's not a meaningful amount of inventory that comes onto the market to keep up with that demand, what do you think happens? That's right. prices start increasing. Now, do I see them going through the roof? Of course not. But it keeps the market really flat. And so how do you use this information, which I think is the most important thing if you own a home and you wanted to sell, or you're a home buyer if you're looking to buy? Well, if you're a seller, it means that you should sell when you want. There's really no big benefit to waiting. There's probably a little more of a disadvantage because you don't know what's going to happen. No one has a crystal ball. Maybe there could be some other black swan event. Shouldn't be a ton of appreciation. So really at this point, if you put your house on the market, price it competitively, it's going to sell fairly quickly. If you're a buyer, the advice is going to be the same, except maybe to act a little quicker. Don't play the housing market like a stock market. If you buy a home, when you're ready and when you qualify, you want to do it sooner rather than later, because as rates fall, like starting to happen, more and more people are going to get pre-approved. And if sellers don't have an incentive, meaning if they have a 3% rate on average and rates are 5.5%, for them to move laterally, meaning to go to the exact same house, might cost them $500, $600, $700 more a month. They're going to stay put and just not put their house on the market, which is going to create a supply, more demand coming from lower rates, makes it a more competitive market. And the main thing is to not play this. I had a realtor tell me where she felt like homeowners were trying to play the housing market like a stock market. And I kind of agree with that, because the last 5 years, 4 years, you could buy a house and 6 months later it was worth $20,000, $30,000, $40,000 more. But that's not normal. Buy a house, take your rent, buy your own real estate. Over time, it always pays off. Regardless of what the market does, you are paying your own house down. Over time, the house will appreciate. And that's the reason to buy a house. So I would say if you're qualified, buy now, refinance later as rates continue to fall throughout the year and more people get pushed in the market. So that's the same advice I give on every video, because that's what the data says. We'll keep tracking it, and if anything changes, I'll let you know. If you have any questions on this, the housing market, or anything else, I'd love to know. Have a great day. Talk to you soon.